Hi everyone, welcome to the webinar. Good to have you join us today to have a look at the forex markets and the markets. And my goodness, I think I can't think of any adjective to describe what happened yesterday. I'm all a bit sort of shell-shocked and punch-drunk, and I hope you had a fantastic day's trading. But before we go and look at the charts and look at what is going to be happening today, if we're going to get a repeat performance, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And how are we going to look at the markets and the charts? Well, we're going to be using our methodology of volume price analysis, which is price action. Actually, VPA is 5 elements. It's price action and volume, which together tell us whether whether what we're seeing on our chart is authentic or not. That's the 30-second pitch for the methodology, as it were. Is it a genuine move or is it an anomaly? But it's actually, there are 5 elements to VPA. So there's price action, volume, there's support and resistance, hugely important. And we're going to be looking at different ways that we measure support and resistance on the chart. It's just not price-based, not only price-based, but also volume-based. Then we also look at candles and candle patterns, and finally we look at time, and not just time in the sense of the chart, the time chart that you're looking to trade, but also multiple time frames. And we also look at using charts which don't have time. They are non-time based charts to help us with those all important entries, exits, and the most important factor in trading, which is actually helping to stay in a trade. That's just the technical analysis side. There's also the fundamental picture, and we also look at what's happening in the related markets. And the related markets are obviously the other 3 capital markets, which are the bonds, the commodities, and particularly at the moment, what is happening with equities and equities as reflected. When we talk about the indices, sometimes people get a bit confused. When we refer to the indices, we tend to, our reference point are the 3 E-mini futures for the Dow Jones, the S&P 500, and the Nasdaq, and they are the futures version, if you like, of these cash markets. Now, they trade 24 hours a day on something called Globex. And if we go over to investing.com, you will see whether, what is sentiment, if you like, whether the wider, the global trading community, investing community, is it buying them or is it selling them? They are the benchmarks, if you like, for what we call either risk on and risk off. I'm just going to turn my little friends at Financial Juice. I'm just turning his voice off. Very kind of him to tell me what is going on at the moment, but not while I'm doing a webinar. Right, and we'll look at those charts as well. And whenever we refer to anything to do with the related markets, the best resource for that is really investing.com. You will find practically every market and instrument under the sun on one of their sites. Okay. What we've also done with the forex market is we have developed, David and I, our own indicators to support the VPA methodology. But for forex, we have these very specific ones, because forex is unique. First of all, you're not trading a single instrument. You're not trading a gold. You're not trading silver on its own. You don't trade gold against silver. You, unlike in the forex market where you're trading one currency against another, and it can be a little bit confusing. So what we started with this indicator over here, which we call the currency strength indicator, although it's more a currency flow indicator in the sense that it tells us at a glance, basically, where is the money going to? Where is the flow of money going to? Is it going into the pound? Is it going into a safe haven currency such as the Swiss franc? Is it going into the dollar, which can act as both a safe haven and other times people sell dollars because they want to buy other assets, as they were doing yesterday? or are they going into the yen? And the yen is again one of these currencies that can be both a safe haven and a currency of risk to buy risky assets. So that gives us a quick snapshot of where is the money flowing into. The next indicator is this one. This indicator is really interesting. This is the matrix indicator, and it, if you like, it ranks the pair. So it takes the data from the CSI and looks at in terms of pairs and tells us where is the flow strongest. Here we can see the flow into the individual currencies. This is the flow into the pairs. So as we can see here from this old screenshot, the strongest flow was into the Swiss yen, and what that tells us is, well, was it actually a case of the pair that we see, the Swiss and the yen, because it's a pair? What we can also deduce from that is is that pair being driven because it's Swiss buying, and it has been Swiss buying because we've got the Swiss yen at the top, and we've also got, take that down. I don't think you can see. Can you see anything above on my matrix, David? I can't see the last. There we are. The pound Swiss down here. So that actually tells us that it is very, very strong buying of the Swiss. Now, the reason I want to highlight this indicator at this particular time is these values. These values are so useful to you and can be so important because this is a 24-hour market, and we don't, when you sit down and you open your terminal, you don't know, until you start looking around and you look at what's happening on investing.com, and you look at sentiment and you say, well, what is the general mood of the market? That's the first thing we have to do. The first thing we have to do is, what is the general mood of the market? Is the market in risk on? Is the market in risk off? And you can only deduce that, as I said earlier, by looking at what's been happening at the previous session and what is going on at the moment. And you're going to get a snapshot of that by looking at investing.com. So we have a quick look at investing.com, and we'll bring it up here, and we can see, well, the futures are up slightly, not the S&P 500, although when I opened my machine this morning, that was over 3 digits. It was, I think, 117. So it's been up and it's sort of coming off a bit, but given what happened yesterday, is it any surprise? I always have the NASDAQ up. The NASDAQ, we'll talk about the NASDAQ later. Certainly this afternoon, we'll have a look at it in more detail. That's clearly down at minus 36. So that sets the mood, if you like. Going back to the matrix with these values, it also tells you in the different time frames whether those values are high, is it high, medium, or low. Now, at the moment, we don't have any way of recording that because I just know, because I look at the matrix all the time. But there is an upgrade coming to this indicator, and it will there'll be a little is it H, will it just be H, high, medium, or low, David? Is it letters? How are we going to how have we high and the average? We put the average, yes. There will be a little there will be a little note up here, which is the all-time high, average, or low. So it gives you a sense, basically, of is there any movement in these pairs? So not only do we have the ranking of the pairs, but has there been any movement and the strength or otherwise of that movement? And the best way I can describe that to you, if I show you what happened yesterday, because I did a post in our VPA forum to say, in fact, when I looked at it, I used the hourly chart. The hourly chart is a very good chart because it picks up what's happened. It tells you where you are and where you are at the moment. It's just a very good chart to give you a sense of where things have been, where they are at the moment, and perhaps where they are going next, as it were, particularly in the sense of overextension. So this was from yesterday. And this value, the values that we have here at the moment, they were actually, unfortunately, I can't find the screenshot. They were very low when I came to my terminal. It was like, I don't know, 17, 18. And that immediately tells me there's not a lot of movement. There has been, pairs move, of course they do. Money flows into the individual currencies, but it was all really, really desultory. Then, of course, we had the news about the vaccine. Let's find the right one. Let's have a look. This is that one. Yes, here we are. Then there was the explosion, as we all know. There had been, if you recall, overnight, there had been a big move up in the indices. This is because at the weekend, the Associated Press and the media generally had declared that Biden was going to be the president. We'll leave it at that. I'm not going to say anymore whether he is or he isn't, but the official confirmation isn't until, I believe, December, but we'll wait and see. So whatever it was, the market has now, it is a Biden presidency, absolutely fantastic, up everything went. And all the risk currencies got bought heavily, the Aussie, the New Zealand. Coming into, this was overnight, coming into the London Open, that had already happened. And which was quite unusual actually, because the London Open was actually relatively quiet. As I said, the big moves had already happened overnight, and we know they happened. And I've got a New Zealand yen chart to show you how the price action had reflected this news in Asia. And it was kind of, it was all quite, it was something, you know, the London Open happened, but it wasn't, you know, it didn't actually, you know, pick up the baton, as you were, and you know, everything charged high. Then we had the news about the vaccine, and all bets were off, and you know, and we all know what happened. But importantly, look at the values that appeared on the matrix from what they were. The 72 was, I should have, my fault, I should have had for some reason, I've lost the screenshot when it was quite low. It went up to 176. It was telling us, this is what this indicator does. It tells you immediately the strength, if you like, of those, you know, the flows into the different pairs. We also have the array over here, which measures the strength of the trend as well. But the matrix gives us an, if you like, a ranking as well, taking the value from the CSI. You kind of use these indicators in combination, as it were. You don't really use them in isolation, but I use the matrix to give me a feel for what is the type of price action that has been behind the ranking at 176, and it went up, and it was going up and out. At one point it was almost 200. It tells me there is some pretty strong moves going on in the market at this particular time. In fact, if I bring what's happening now, in fact, that's why let's have a look quickly. Right, what are we happening now? I've got 26. In fact, we've had the London Open. In fact, just before the London Open, it was 7. So what does that tell you? It's a very different market that you are now going to try and take some trades from, and it has all sorts of implications in the type of price action that you're going to be facing, the type of risk that you are likely to be facing, and it also explains to you why, although this market is, as I said, it's a 24-hour market, it's open all the time, the sessions are so important. You know, some sessions are going to be more liquid, some sessions are going to perhaps deliver stronger, more trading opportunities and better trading opportunities. But it also, these indicators, what they tell you, they will also tell you when the market conditions are, as I said, are going to be very, very tricky. Now, given what happened yesterday, is it any surprise? And the answer is probably no. However, let me just take this away. Let's go back to the so this is basically these 4 indicators. I've just talked about these 2 in depth. David will go through the currency rate in a little bit more detail, and also the currency heat map. We're always very poor currency heat map, we always tend to leave it out of our discussions, which is a shame, because what it does, it actually takes all the data and presents it on one chart in multiple time frames with the sales. David, would you mind just highlighting it later? Because as I said, I always tend to ignore it. I just, not personal preference, it's just time. As I said, currency strength, individual flows into the individual currencies. How is that represented in the matrix? The matrix is a very sophisticated indicator. It doesn't just rank the pairs, it tells you, it gives you an insight into what is actually going on the chart in the particular time frame and those values. And as I said, there's going to be an upgrade to the indicator, which will give you a sense of whether the number that you're seeing is high, is it an all-time high, medium, or low. I mean, yesterday it was fairly obvious, what was happening with the with things rampaging. And of course, we've got the currency array, which really takes the strength of trend. And then we've got the currency heat map in multiple time frames. Right, now, very quickly, what's been happening while I've been talking? Well, certainly the pound is sort of back on the move, but I just want to look at New Zealand yen, because this goes back to what I was trying to explain earlier. Right, this is the New Zealand yen. There was a better example of this on the 10-minute, 15-minute chart, but if I bring up the 10-15-minute chart, it's too squashed, basically. This is 30-minute chart. This is obviously the open. Everything gapped up. This was on the news of the Biden presidency. Everything rushed up. I think by the time we came down in the morning, it was the Dow, the YM up 400. I think that had gone up 400 overnight, and the risk pairs had responded accordingly. So this was the New Zealand yen. As you can see, most of the move had happened overnight in Asia. If we look at the London Open here, as I said, the sentiment was exactly the same. Not a lot was happening, but not a lot was happening in any of the other pairs. And we thought, oh goodness, this great big move has gone up. What happened? It kind of went sideways. Then it kind of ticked up a little bit more, and then this was the explosion, as we saw on the news of the vaccine. Now, all I will say about the vaccine, I mean, thank God, we really don't. Do we really want to live our lives the way we are being forced to at the moment because of lockdowns and what this virus has done to the economy and what have you? But as someone has actually pointed out, this was based on a press release. Now, normally with vaccines and its efficacy, it has to be done through what's called a peer review paper, David, or something, isn't it? It has to have like an official sanction. I hope it is what it is, and and we can find a medical way out of the situation we are at the moment. But it is quite an important distinction, because what we don't want is all this wonderful euphoria, and suddenly in a week's time or so, it is reviewed and they find some something seriously wrong with it. I really don't want to pour cold water over everything, but it's something to be aware of. And it's also an example of where the market will was it buy the rumor, sell the news, David? That's with markets. We have to have at the back of our mind, by all means, trade what we see on the chart. You have to look at the price action, look at the volume. Is that a valid move? VPA will tell you, support and resistance will help you. The candles and candle patterns will also assist you in your trading decisions. But the back of your mind all the time, you have to say, these markets are manipulated. These markets are manipulated. Yep, fine, I will take advantage of what I see at the moment, but there is always a but. And really, that is all I want to say about that at the moment. So going back to the CSI, where are we? Where are we at the moment? The numbers, you see, they're kind of coming off already, which is a pain, because it tells you that that there has been a movement, but it's a bit desultory, it's possibly a bit choppy, and it's certainly not the trading conditions that we had yesterday. But no matter, there we are. And in fact, we can also see the Aussie is still being bought, the Aussie yen, with markets are still generally positive. On the hourly chart, we've got the Aussie, which is the blue line, still rising. Now, if I were a trader who didn't, if you like, focus on a particular currency or currency pair, I would be looking at that and I would say, okay, well, you know, the Aussie is, there's certainly some buying in the Aussie. Let's pull up, let's have a look here. Got the wrong one. No, it's kind of, they're kind of in the middle. So think, oh, well, maybe because it's in the middle of the CSI and it's sort of turning up there, possibly it's certainly got a little bit more to travel if sentiment does hold up. What have we got here? We've got the New Zealand turning. Pound is interesting. It's been going up and it looks like it's possibly got some more upside to that. These values here, 80 and 20, they don't mean anything per se. They're just a kind of visual guide to tell you whether that is you know, the point at which, if you like, it becomes overbought or oversold. But it is purely a visual guide. We had to put something into, you know, to give it some frame of reference, if you like. And as I said, now what can happen is, don't assume that once it gets to 80 and 20, it is going to immediately, you know, turn over. As we can see here, things can stay oversold and overbought a lot longer than you and I can stay solvent, as it were. But it's interesting because we've got some, you know, we've got some potential reversals coming up on some of these currencies. We can see from overbought and oversold, but whether, you know, they're going to carry on further before they roll over, we will have to wait and see. And certainly, if I were a trader that looked, you know, at sentiment in particular, it's a little bit of a mixed picture, because although there's some upside left on the Aussie, the New Zealand is already kind of, you know, a bit sort of turning down at the moment, and certainly so, and the Canadian's not doing very much. If you are a trader who likes to focus on very specific pairs, again, you would look at this and you would say, well, you know, where are my pairs? Am I a euro dollar trader? Am I, do I like to trade euro yen? Do I like to trade pound euro? Well, then I would isolate the euros and I would isolate the euros over here. And I would say, well, you know, what are my pairs doing? What's happening here? Where's euro dollar? Oh my goodness, euro dollar is minus 4.15. And it'd be interesting to go and have a look at the chart and think, what is actually happening on that chart? Is there, you know, is there any likelihood of any trade at the moment? That's what you have to remind yourself. It is a question of at the moment. So let's have a look what the euro dollar is actually. Let's have a look at the 5-minute chart. Now it's quite deceptive here. It's 18.14, 18.24. You're talking 10 pips. That looks really, oh, that's great. That's only 10 pips. You know, so what's it doing? It's basically moving sideways. So as you can see, what the indicators do, not only do they highlight potential trades, but they actually tell you an awful lot of what is going on on the charts at that particular moment, and whether there is the potential for a trade. So that is if you are, you know, if the euro dollar is your pair of choice. As I said, you have all this information even before you look at a potential trading setup. Right. David is very much of the other school of thought, where he will just, he's a guerrilla fighter. He doesn't care. He just looks for a trade. He just, you know, that's it. He just wants to find the best trading opportunity. And as I said, he doesn't really care about the pair in question. Now here we have the luxury of that because of the way we actually pay a commission of a standard, very small amount. On some broker platforms, if you're with your broker, it may not be possible, and it's based on the spread. You may not have that luxury. You know, the spread on some of the pairs may be, you know, it just doesn't make it viable to take some short-term trades. Right, may I pass over to you then? Is that okay? Because you've probably been on the yeah. Before I do, let's have a look. We're going to talk about this a little bit more as we go along. You may have noticed when I went over to the quantum trading, let's have a look. I know we have some of our students here with us today. They may not have been into their back end, and those of you who we talk about our, I talk about our forex program, a forex program, details which you will find at quantumtradingeducation.com. But what we have done, which is this is literally in the last sort of day or so, and that is we have put together for students of the program the opportunity through a funded forex program where basically you can trade. You don't have to use your money. You trade other people's money, and what it allows you to do, as I said, manage, trade a fund that starts from $5,000 all the way up to $2 million. It's a step by step. You start at what we call an evaluation phase. You have a choice of opting for a $5,000 account, a $10,000 account, or a $15,000 account, and you work your way through the different levels until you get to the 2 million. And of course, you will get a share of the profits. The details of the program, of this program, are all at quantumtradingeducation.com. And you say, well, what will it do for you? Well, what it does for you is, first of all, it allows you, as I said, to trade these sums of money that possibly you may not have the opportunity at the moment to put together. And it's without any risk, because you're not putting any money in it yourself. You are, as I said, you are trading other people's money. It allows you to put into practice what you have learned on the complete forex trading program. And what it also does, certainly when you start working your way through the program from, as I said, the evaluation phase up to the 2 million, you can then start earning a regular monthly income. It also teaches you the discipline of trading there are very strict risk and money management rules. And I think sometimes with trading, it's not that traders don't know what to trade, they don't know how to trade, they can't recognize trading opportunities. It's actually sticking to risk and management and risk and money management rules, because we all get carried away with the emotion of trading, the good emotions and the not so good emotions. And it gives you it kind of puts you in a situation where you have to follow these rules or you're out of the game. It's as simple as that. But the rules are very strict, and they are they're more than doable, as it were, and they will help you develop the right kind of mindset and the right kind of approach, if you like, to becoming a successful trader. And it also gives you the confidence to handle very large accounts. I know you think that may sound a strange thing to say, but sometimes large sums of money, they actually frighten people. They kind of mental block about money, as it were, and very large sums of money. And this is what it's all about. It's becoming confident. It doesn't matter whether it's 2 million, it doesn't matter whether it's $5,000. The approach is identical, the rules are the same, the mindset, the discipline is all the same. And the best thing about it, it's other than a one-off cost of entry into the program, that's it, into the funded program. It doesn't cost you anything else. And of course, you can trade it in parallel to your personal account. If you have an account yourself with your own money, then you can run these in parallel. So that's what I wanted to say. David's got more information on actual questions. He has really been the instigator of this, the nuts and bolts of the program. If you've got some questions in the webinar, just pop them into the chat box and we'll certainly answer them. But you can head over to quantumtradingeducation.com and all the information is there.